from the Florida Housing Association. There are certain limitations as well, which we'll go over. Primarily, it's for specific professions that are qualified to utilize this program. Now, there are a little over 50 professions. These are licensed and certified positions. And as long as you can provide the evidence and sign an attestation that you are currently in that role, then you would satisfy that particular requirement. So I'll read something from the presentation that I do have from Florida Housing. Their announcement is the Hometown Heroes housing program makes housing affordable for eligible frontline workers, educators, police officers, healthcare providers, childcare, firefighters, nurses, military personnel, and others by providing a down payment and closing cost assistance to qualified homebuyers. The Florida Hometown Heroes Loan Program offers a first mortgage rate and additional special benefits to those who currently serve their communities and those who have served and continue to serve their country. So, as I mentioned, there are limitations to who qualifies based on your profession. They are going to be specific. I'll go over actually the entire list near the end of this live. We should be going for about an hour. So if you're going to stick around, awesome. If not, I'll be posting a recording of this presentation on my Facebook. So you can always catch me there at Tampa Mortgages. Let's see. All right, so 50 eligibility. One of the biggest benefits for those that qualify with this program is that they are going to get up to $25,000 that can be used towards their down payment and closing cost requirements. Now, how's that $25,000 calculated? It's based on a percentage. So the qualified borrower can receive 5% of what the loan amount is in order to put towards down payment and closing costs. So the 5%, I mean, to qualify for the maximum of $25,000, they would need a loan amount of $500,000, which with this particular program, depending on the county, you do have opportunities to go above and beyond that $500,000 loan limit. So we'll go over that as well, but that's like the biggest benefit. Right now, the Florida Bond is offering $10,000, just a flat $10,000 that you can put towards down payment and closing costs. One of the other big things that I caught that I definitely want to share is that with the Florida Bond, you're going to end up paying some additional costs. There is a 1% origination fee that's associated with obtaining the bond. So that 1% technically is already eating into that $10,000 depending on the loan amount. So there's there's heated debate over that and what it's really for. But with the Hometown Heroes program, there is no 1%. And actually, they are even limiting lenders that are approved, like we are, to not be able to charge that origination fee or any kind of origination fee. So the 5% is going to be fully used towards the down payment and closing costs, which would just further save qualified home buyers, money that they would have to come up with otherwise using something like the bond or other similar type of down payment assistance programs. Let's see. Can you buy the White House? I don't think the White House would qualify because this program is specifically for the state of Florida. If you're just talking about, a White House, I'm certain that you can find one with the right realtor in your, yeah. Another thing is the income restrictions. So there are going to be income limitations like most down payment assistance programs. The bond has changed recently, but with the Hometown Heroes program, it seems to be the highest I've ever seen for a program. And it is, again, going to depend on your county. So, depending on where you're looking to buy, that income limit is going to change. But I looked at all of the counties across Florida, and the lowest income amount for a borrower is going to be $118,000 a year, and that's gross income. In a lot of situations as well, let's say your base salary is under that 118,000, but you also earn bonuses, commissions, incentives. If you're able to qualify just on the base salary, that's all we would use on the application, and what is on the application is ultimately what is going to qualify you for this program. So even though you may be in a situation where you make more than the income limit, if that additional income limit above your base salary is what's putting you over, there's a very good chance that we can qualify you with just the base, not use that additional income, and you would still be within the guidelines of their income limitations. So let's see, all basically standard fees. You do have to be a first-time home buyer unless you are a veteran that qualifies for a VA loan. So with first-time home buyer eligibility, that's a lot of people may feel that, okay, well, I bought a home years ago for whatever reason we had to sell, and I've been renting since. I'm no longer a first-time home buyer. That's not necessarily true. The definition and guideline that's used to define a first-time home buyer is someone who hasn't owned a home or been on a mortgage for the past 3 years. So if you owned a home at some point in the past and you ended up selling, you went to live with family, or you rented for 3 years or more, then that clock would reset and you would actually be reconsidered as a first-time home buyer. Any questions at all, let me know. If this information is helpful, make sure to tap the screen for likes so other people can kind of get fed this, and hopefully we can help as many people take advantage of this program, because there's a lot of money that the government's poured into it, and it's just a fantastic program, as I'll go through a lot of the perks and details about it. But yeah, any questions at all, just put them in the comments. I'll kind of glance down here and there to answer them. And yeah, so first-time home buyer. How do they verify whether or not you're a first-time home buyer? Like I said, 3 years is what it takes. Don't be on you haven't been on a mortgage, you haven't owned a home. In 3 years, you can qualify for first-time home buyer programs. The way that they verify this is the program is going to ask for your last 3 years of tax returns. So as long as you provide the 3 most recent tax returns and they don't reflect on the tax returns that you own property, that you own a home, that you're filing for mortgage interest deductions, then you're good. You're considered a first-time home buyer. Got a question here. How do we pay that back? Another important point is that the funds that you're going to be receiving for down payment assistance is going to be given in the form of a second mortgage. Now, this second mortgage doesn't have a payment. It doesn't have an interest rate. That money is just going to be, it's essentially a loan that's going to sit as a lien on the property, and it does have to be paid back at certain points where if you decide to refinance, you'll be required to pay the $25,000 or whatever amount that was used as assistance back. If you sell the home, you would be required to pay it back. And it also mentions that if you no longer live in the home, you would be required to pay it back. But to me, I don't know how they would enforce that part. Obviously, if you're selling, they're going to know. If you refinance, the lender's going to know that there's a $25,000 lien. But if you were to move out, it's on there. You're supposed to pay it back. I don't exactly know how they're going to know that or enforce it, but that is in the official rules. Credit score requirements. Credit score requirements, much like other down payment assistance programs like the bond, it's going to be a minimum 640 middle FICO score. Now, Credit Karma and Experian and even CreditWise are great tools to use to get an idea of what your credit score may be, but you need to know that with mortgages, they're going to utilize a different type of calculation. It's going to be a FICO 10 score. It's a different version from what all the other credit monitoring systems use. So the best thing to do, you can use Credit Karma to kind of get an idea of what's on your credit report if you need to pay debts down or if you have collections. But to really find out what your credit score is and whether or not you qualify, you'll want to speak to a lender, someone like myself. At the very least, we can do a free soft pull that will give us at least one of the bureaus to show us where your credit might be. It won't result in an inquiry, it won't have any effect on your credit, but it'll at least allow us to take a peek at what your FICO 10 score is so that we know what we're working with and we can kind of see what's on the credit report and offer any assistance. Great questions. I'll kind of be covering those as we continue here. Let's see. So there's another program that's currently available called the Salute to Our Soldiers or Salute Our Soldiers down payment assistance. That's very similar to the bond. It gives you $10,000 as well. It doesn't have the first-time homebuyer requirement. So if you are a veteran, the list says veterans who discharge status is anything other than dishonorable, active duty personnel from the military. This includes the Air Force, Army, Coast Guard, Marine Corps, Navy, National Guard, and the reserves. Or if you're a surviving spouse of a deceased veteran who possesses a certificate of eligibility, would have to be a VA loan. And veterans and their spouses are exempt, as I mentioned, from the first-time homebuyer requirement. So if you're a veteran, you fit within that those requirements. You don't have to be a first-time homebuyer in order to take advantage of this program. Let's see. Any questions about that? What's the program called? The program we're talking about today is called the Hometown Heroes Program. It's available across the state of Florida. It's just launching today, June 1st, and we'll be going over some more details and information on that. The program I was just referring to that sort of rolled into the Hometown Heroes is the Salute Our Soldiers program, specifically for veterans, people that would qualify for that VA loan. The main benefit of that particular program, which also applies to the Hometown Heroes, is that you don't have to be a first-time homebuyer if you're a veteran to qualify for this program. How long will the program last? Generally speaking, these programs last until the funding is out for these programs. So the sooner you can take advantage of it, the better chances you have of actually reserving the funds necessary to utilize those assistance programs. And I believe there is an amount here. Let's see. 50. All right. Okay, $100 million. $100 million is what's currently funded for this program. So, $100 million, that's too big of a number to divide by 25,000. If everyone were to use the maximum amount of 25,000 in assistance, that's still a significant amount of families that can utilize this. But, once that funding runs out, whether or not they vote to add more funding or figure out ways to extend it, there's no set due date. These programs typically run until money's out and there's no additional funds that's being fed into it. So hope that answers your question. Again, this is just for the state of Florida, and it's any part of Florida. So you could be up in the Panhandle, you could be in Central Florida, you can even be in Southeast Florida. The program does work. Now, in certain areas, like South Florida, you are gonna find situations where the income limits as well as the purchase and loan amount limits are going to be higher, because in those areas the housing prices are going to be higher compared to other parts of the state. So it does kind of work out from county to county depending on like the average median price. And we'll kind of go over some of those ranges in a little bit. So yeah, we'll get back on the 5% down payment assistance. Maximum is $25,000. So if you were to get a loan of $500,000, you would be able to maximize that $25,000 that you would be able to put towards your down payment and closing cost requirements. Anything less than that, will be calculated at that 5%, whatever it may be. And it is in the form of a second loan. It does not have a payment. It does not have interest rate. It doesn't have an interest rate, so it's not accruing any interest. It's essentially a $25,000 lien that's going to sit on the home. It does need to be repaid if you ever sell the home, if you ever go to refinance your home, or it also states if you were to move out of the home and no longer live there. Basically, if you were to turn it into a rental, you would be required to pay that $25,000 back. Again, I don't know how they would enforce the last one, because most lenders don't really know when you move out of a house. If you were to do so, the other ones, everyone will know when you sell the home, because the title company is going to run a lien check, and at that point in time they'll be required to pay that $25,000 back with your proceeds. If you refinance, same situation. Title company is going to pull a lien search and be able to see that there's a $25,000 lien, and that it would be required to be paid off before they can close that loan for you. Yeah. As people keep coming in, welcome. Just drop your questions about the new Hometown Heroes, just launched today. All of the state, across the state of Florida, it's available in every county. We're going over some of the details about it. Get up to $25,000 in down payment and closing cost assistance. If you are a qualified veteran, you would be able to use a VA loan, which would be 0% down, and use up to the $25,000 towards closing costs or any additional costs. If we have, the extra funds, we can even explore looking at paying down some of the principal, or just applying it more as a down payment so that you don't have, you can lower that payment for you. Where am I located? I am officially in the Tampa Bay area, but I'm licensed throughout the state and currently an approved lender for this program. So anywhere in the state, I would be able to help you out. I can do Zoom calls, phone calls. Everything nowadays, post-COVID, is pretty much done virtually. So I've never had a problem working with people that are outside of my area within the state. But yeah, I'm officially in Tampa Bay. So let's see, let's move on. And yeah, guys, if this is helpful, don't forget to tap those likes. That way more and more people can possibly see this, and feel free to share as well. Thank you for sharing. Custades. Awesome. And thank you for the likes as well. All right, so the similar thing with the bond program, the Hometown Heroes isn't going to be limited to just an FHA, VA, or USDA loan. There are options available where you can obtain an FHA loan as the first. You can obtain a USDA loan, which would be 0% down as long as it's you meet the qualifications of USD as well. Primarily, the main qualification that stops most people with USDA is the location of the home. USDA is geared towards rural areas. I can tell you here in Tampa, we have some USDA eligible areas that are not rural at all. So it's important, if you are interested in exploring that, speak to someone like myself. We can look at the maps, or you can do a search yourself and just go to USDA.gov. I find the easiest way to get to the map is just to Google USDA map eligibility, and the first thing that comes up is going to be the link to their eligibility map. You put in an address, you can put your address, and kind of just zoom out and see which areas possibly around you are USDA eligible. USDA also has its own set of guidelines with income and everything else, credit score, so definitely something to keep in mind. In addition to those, we also offer the Hometown Heroes program as a conventional loan. So if you qualify for a conventional loan, you do have the ability to use that as a first mortgage as well. It is going to require 3% down, 3 to 5% down, depending on the situation. Let me see. The main difference, when people ask, what's the main difference with FHA and conventional? The main differences to keep in mind: FHA nowadays, you are going to have that PMI, that private mortgage insurance for not putting 20% down. You are going to have that for the life of the loan. So regardless of how much equity you've built, how much you've paid down the balance, how much your home has gone up in value, if you have an FHA loan, that PMI is going to stay on there until you refinance or sell the home. So that's something to keep in mind. Now, the benefit of FHA is usually you're going to see a lower interest rate on an FHA loan compared to conventional, and the guidelines are going to be a little less stringent. So you may qualify for a slightly higher amount because the debt to income ratio can exceed, well, I guess it wouldn't apply here because 50% is going to be your hard stop with the Hometown Heroes. So the PMI is going to be the main thing. With conventional loans, if you don't put the 20% down, you do have the opportunity to eventually get rid of that monthly PMI, private mortgage insurance payment, once you've established at least 20% equity in the home. And most lenders are also going to require that you've lived in the home for at least a year. Let's see, I think I missed some questions here. Do I have to tell the selling realtor how much I'm approved for? Not necessarily. I do have a few agents that I work with in partnership that prefer to have a offer letter that's written with the amount that they are wanting to offer on a home, just to kind of show that, okay, well, we're offering our maximum, even though that is not necessarily their true maximum. I don't really have a benefit, or I don't think there's a benefit either way. If you show them you're pre-approved for more, yes, they might come back and counter, but in this market, you've got to come forward with your strongest offer to have any chance of getting a home under contract. So you don't have to tell them the true pre-approved amount. You can adjust that on the letter to see fit. Would that work on a next gen house? I don't actually know what a next gen house is. So if you want to briefly explain, or if anyone wants to explain what a next gen house is, I'll be happy to find out for you. And let's see, hometown heroes work in California. California, I'm also licensed in California. That's where I'm originally from, born and raised in LA, but been living in Florida since 2004. So love it out here. Cost of living was much better than California, but it's seemingly starting to creep up. I still think California is just, cost of living is insane. But my family's still all out there, so I get to visit quite often. I know that they do have down payment assistance programs that are available out there. A lot of them don't really make sense because the requirements would kind of maximize you at a loan amount that would never find you a decent home that you'd want to live in. But there are programs, not the specific Hometown Heroes. What we're talking about today is specifically for the state of Florida. So just being launched today, it's officially available now for residents of Florida, people that are looking to purchase property, their primary residence here in the state of Florida. Let's see, what about USDA loan? If we're talking about USDA loan with regard to PMI, officially there's no private mortgage insurance requirement on USDA loans, but there is something called a guarantee fee, which acts very much like PMI. Unlike PMI, though, that money that you're paying each month is going to be going towards the USDA program so that they can continue to have the funding to offer this program indefinitely. So compared to PMI, it's going to be significantly less. The guarantee fee is going to be significantly less. With the guarantee fee, you also have to pay an upfront fee of 1% that can be rolled into the loan. So USDA doesn't have PMI, but it does have a guarantee fee. Significantly less, but still an additional cost above your mortgage payment, taxes, insurance, and possibly any HOA fees. All right, next-gen homes are houses with additional room, with small kitchen, and possibly a garage with its own entrance. Yeah, I don't know what the difference would be with that compared to a multi-unit home or a home with an attached or detached mother-in-law suite, but I can tell you that the Hometown Heroes will allow funding. The program does allow you to purchase a multi-unit. It could be a duplex, triplex, or fourplex. Anything above 4 units would not be considered residential anyways. You would have to look into the commercial lending space. But yeah, if a next-gen home is similar to, if it's categorized as a multi-unit or a home with a detached unit with its own kitchen and bathroom and everything, it would qualify for this. So I'll need to look into it to get more details, though. Next-gen homes. Oh, okay. If it's just considered a multi-unit home, then yes, this would qualify for the multi-unit homes and even homes with a separate mother-in-law suite. One thing I did find out as well, a very popular home buying hack that you'll probably see across TikTok and other social medias, which I'll confirm is true, is that you can use an FHA loan to purchase a multi-unit home and be able to utilize the anticipated rent value of those other units towards qualifying. So multi-unit homes are going to be a little bit more expensive than your single family home, so you would technically need to make more money to qualify for that higher amount, but utilizing an FHA loan to purchase that what we would do is there would be a standard appraisal to get the value to make sure the condition of the home is acceptable. But then there's also going to be an additional type of report that's going to determine the rental value of those other units. And based on the rental value of those other units, we can use 75% of that value and essentially add it as your income. Whether or not you have a lease agreement in place before you close, you would be able to do that, and you'd still only be required to put the 3.5% down on the purchase price. Mila Merez, yep, best way to buy a home. I absolutely agree with that. If I could go back in time and reconsider how I would buy our first home, I would definitely go that route and look for a multi-unit. The additional benefit of that is you just have to live in the home for a year. So during that first year, you could potentially have your entire mortgage paid with the rents that you collect from the other units. And then after that first year, you can move out and turn it into a complete investment property. You would still have that original FHA loan, the interest rate, terms, none of that changes. So you'd have a really, really good low mortgage payment that now is generating cash flow for you on a monthly basis. So how do we find a lender that helps with this loan? I'm actually a lender here in Florida. I'm based out in Tampa Bay. We are an approved lender for this program. It launched today. I just went through the full training to learn everything about it this past weekend. So if you have further questions, if anybody has further questions or just want to talk one-to-one, I also do free 15-minute consultation calls, whether you want to talk about this program or you need a second opinion or you just want to you just have a question that you can't find anybody to answer without having to pull your credit or go through a whole application process. You can check my profile, click on the link in the bio, and then schedule a free 15-minute call. I've been doing this for coming up on 20 years now. I've been working in the industry, so I can't say I've seen it all because I see new things all the time, but I take a very educational approach. I mean, even if you are using a different lender and they're not answering your question, I'm happy to offer some assistance. I think everybody deserves the opportunity to purchase a home, and they should purchase a home with the utmost comfortability and not walk into this huge life decision without knowing all the details or not fully understanding everything. So link in my bio, schedule a free call. I'm always happy to chat one-on-one with you. What is the credit score? This program's credit score is going to be looking for a minimum of 640. Now, it does have tiers. So if you have a 640, you would qualify to get this program. Your debt to income ratio, which will determine how much you can afford or how much you would get qualified for, is going to be capped at 45%. So what that means is if you have a 640 to a 679 credit score, you're going to be capped at 45% debt to income ratio. That means based off of your gross income, monthly income, it needs your housing payment, your mortgage, taxes, insurance, your other current debts that would be on your credit report would need to be under that 45% of your monthly gross income. So monthly expenses plus the housing needs to be 45% or less of your gross income. So hope that helps. Now, if you have a 680 and above, then you would qualify for that debt to income ratio to be raised to 50%. So it gives you a little bit more room to work with. But 640 is the absolute minimum, and there are just no exceptions regarding that. I'm working with the client now with the 638, and these programs just will make no exceptions. So we're looking into ways that we are going to rescore them. I have tools that can basically tell me exactly what the score will be based on what they do. Most of the time, it just requires you to pay down a credit card to a specific balance, and we can get it done that way. So, Mila, you're in California. Oh, awesome! What part of California? Let's see. Any other questions? Melissa, you're in Tampa as well. Awesome. Yeah, reach out, schedule a call. I'd love to connect with you and get you the answers to any of your questions and see if this is a good fit. If not, we can always look at other options. I just love being a resource for my clients, potential clients, and my realtor partners who I work real closely with. So let's see, moving on. The rate. Now the rate potentially could change from day to day. Right now, the program is what sets the interest rate for this program. And for today, it's at 5.5%. So, rates, as we all know, have been going up. They've been steadily going up since the beginning of the year. So 5.5% is not horrible, especially if you are in that 640 to maybe 700, 720 range. You aren't getting a 5.5% going without the program. Standard rate pricing will probably put you closer to 6%. So it really is beneficial if you are under that 720. If you're above it, it may be just the same, or maybe 0.25% at the most lower. But keep in mind, you're getting up to $25,000 that you don't have to come up with out of pocket in order to get into a home. Let's see. Any questions I missed? If I did miss any questions, feel free to tap in again or put it in again. I'll keep checking, but we'll move on. So income limits. Income limits are going to be set at 150% of the area median income amount. So most programs currently are going to be capped at 80%. So this is almost twice as much as what your standard down payment assistance program is offering. Let me take a look here. Let's take a look at the income limits. So the income limits, they're gonna range depending on your county. Certain counties, like I could see Collier County, their HERO's income limit amount is $141,450 a year. So that would be your gross income. If you make bonuses or commissions or anything above your base, we don't technically have to include it, but if you include it and it's still under that 141, it just means we can utilize your full income. You have counties like Bradford. Looks like that's going to be the bare minimum, and the bare minimum income limit is still $118,950. So even in some of these lower income areas across the state, the lowest limit that's out there for the state is $118,000. So you can still qualify for a good home. I know with current programs, a lot of the challenges is, people want a certain type of home, a certain price for a home, but because they qualify for it, they end up making too much money and don't qualify for the program. Let's see. Is this the right time to buy? Well, that's just $1 million question, isn't it, in real estate? What I tell my clients that ask me that is, it absolutely is the right time to buy. It is not the right time to overextend yourself. So if you're currently renting or you're looking to buy, You plan on buying a home and either living in it for a long time or keeping it, eventually flipping it into an investment property. If you're in real estate for the long term, it is absolutely the best time to buy. Um, Historically, you're always going to see real estate prices continue to go up. I've even been telling clients now that, even the people that bought before the 2008 crash, had they kept that home and stayed in it, those homes are now worth a lot more than at the bottom of what happened in 2008. Unfortunately, most people short sold or were foreclosed on, but for the few that actually kept the home, managed to find a way to keep the home, make the mortgage payments, then the home has now exceeded the value of what they paid for in 2000 pre 2008. So if your goal is to buy a home and you intend on living in the home or just never renting again, it's absolutely the best time to buy. Is this individual income limit or for the household? That is an awesome question. A lot of programs are going to look at the household income, but for the Hometown Heroes, they are simply going to look at what's on the application. So if you have a spouse and you both plan on being on the mortgage in order to qualify for the most, as long as the borrower's combined income is below the income limit, you're good. If if you exceed it, but one of the borrowers makes under that limit, if we can qualify you just on that single borrower, whether it's the husband or the wife, you would be able to qualify just solely based on what we put on the application. So it's not a household income. I know that there are programs out there that will look at the household. USDA looks at household income, so regardless of who's on the mortgage, they're going to pull a tax return transcript and they're going to verify every other working member in that household and calculate that income to see if the household income exceeds. So, yeah, hope that answers your question. Let's see. I'm in Hillsborough County here in Tampa, and for Hillsborough County, our limit currently is 123,150. That seems to be pretty much the median around here. You have Miami-Dade at 146,000. Looks like Monroe County has 153,700. So huge amounts. There are purchase amounts as well, or I should say loan limits. Loan limits for FHA and USDA loans under this program are going to be different from the conventional program. So again, this will apply towards a conventional loan as well as FHA, USDA. VA doesn't seem to have a loan limit. Nope. I'm wrong. VA follows the conventional limit, which is going to be higher. So just as an example, in Hillsborough County, income limit, you have to make under $123,000 as stated on the application. So whoever's the applicant for the mortgage, they need to qualify by making under $123,000. Your loan limit, if you were to go with an FHA or USDA loan, is going to be $420,680. These numbers are usually never a round number, which makes it hard to memorize, but $420,680 would be your FHA USDA loan limit. So you'd have to find a home, and after the down payment, you'd have to be under that amount for your loan limit. If you are going with a conventional loan, though, the conventional loan limit, it looks like across the board for every county, and this is conventional and or a VA loan, your loan limit is going to be $647,200. So with the conventional, another huge benefit is that if you qualify and go the conventional route, you'd have a lot more room to find a bigger home that would fit your needs. Again, never overextend yourself. Stick with a budget that you can afford. It makes no sense to get into a home that will ultimately make you house poor or put you in a risky situation where you won't be able to make those payments. But if you're qualified to do so and it's within your comfort zone, definitely a huge benefit. FHA USDA 420 maximum loan limit. Conventional VA is 647,000, so that's like over $227,000 more in loan amount compared to FHA or USDA. I wish this could apply to everyone. Yeah, I wish too, because I think everyone deserves the opportunity to purchase a home. At this time, the program is only for a specific amount or specific professions that they deemed as qualified, and we'll get to that list here shortly. But yeah, thank you so much, guys, for the likes. I see we're up to 2,000. Feel free to keep tapping the screen. I appreciate all the likes, all the shares as well. And I'm a local lender here in Florida. I'm specifically here in Tampa Bay, but I can help you all across the state, whether we need to jump on a Zoom call or just jump on a phone call to discuss any questions or get you started on this program. I'm happy to do it. If for whatever reason we have a discussion and you don't qualify or you don't meet the qualifications, we can find solutions and try to explore either other options, or we can explore ways that we can get you in a position to qualify. Shelly's asking, are you a lender? Yes, I am a lender here in Florida. I'm talking about the Hometown Heroes program, which is specifically just for Florida today. I'll talk about some other programs. I'm also licensed in Georgia, Texas, and California. So if you're in any of those states or know anybody in those states, I can certainly help them as well. Now, anything beyond that, the company is licensed in 47 out of the 50 states here. So I do have a team that I've worked with in the past. Thanks to TikTok and other social media, I've gotten to meet and connect and help lots of people that are outside of the states that I'm licensed in. So I've had an opportunity to work with the referral team here, and they're fantastic. I would recommend you to specific people that I know can take good care of you. But yeah, right now I'm in Florida, and the program we're talking about today, Hometown Heroes, is specifically for Florida, any part of Florida, as long as you meet the other qualifications and requirements. Let's see. How are the interest rates and why are they important? I'm not sure if you mean interest rates in general or interest rates for this program. This program is going to have, the program itself determines the interest rate. So it could change. It generally doesn't change. And currently it's at 5.5%. So that's really where you're going to find rates these days. If you have really, really good credit, you're really still going to be in that low to mid 5%. With credit that's not stellar, you're going to be approaching that 6%, possibly even at 6% or 6.1%. And why it's important, I mean, the interest rate does determine how much your monthly payment is. So right now, what's going on in the market and what's causing a lot of challenge for home buyers is that with the home prices continuing to go up, mixed in with the interest rates going up, their affordability and what they would qualify for is starting to decrease. So now you're looking at homes that are maybe above what your price range was 6 months ago. The rates are higher now, so your payment is also higher, which is just translating to you may have qualified for a $300,000 home 3 to 6 months ago, but with the current situation, you know, rates going up, you now only qualify for a $250,000 home. So that's going to be a lot more challenging to find in this market versus, you know, a $300,000 home. Does this program benefit the purchase of an investment property? No, it does not. It will only allow you to you're only allowed to use this program for a primary residence, a home that you will live in. There is the opportunity, though, if you were to utilize an FHA loan, that you can use this program to purchase a multi-unit home that you would be required to live in at least one of the units, but you would essentially have an investment property because you have the ability to lease out the other units that you're not occupying in order to generate a monthly cash flow. So yes and no. You can't use it to buy an investment property that you're just going to turn into a rental or, you know, an Airbnb, but you do have the ability to use this to buy a multi-unit, which you have to live in, but you can still use as an investment property by renting out the other units that aren't occupied in the home. So hopefully that helps. Let's see, are you a lender? Can you refi out of it? You can refi out of it. The rules for this program is it is $25,000 up to $25,000. It's really, it calculates to 5% of what the loan amount is. So that is the amount. 5% of the loan amount is what you would get in assistance funds. It does sit as a second loan, basically a silent second, no payment, doesn't accrue interest, and it does need to be paid off when one of three things happens. You either sell the home, you'll be required to pay off the entire amount that you pay. If you refinance the home, you'll have to pay off the entire amount. And then the last one, which I mentioned earlier, I don't know how they enforce it, but it does state in the rules that if you move out of the house and no longer occupy it, meaning you turned it into an investment property, you would be required to pay that off. But aside from you calling the lender and telling them, hey, I'm going to be moving out of the house, I can't foresee a way that they would be able to, you know, monitor that or be able to know that you've moved out of the house. But those officially are the three things. Does DACA qualify or non-permanent residents? That's a good question. We don't really work too much with the DACA program, so I wouldn't be able to, you know, connect those together. DACA's generally for a bank to offer those programs, so you may want to check with the bank. I'll see what I can find out, but yeah, sorry, I won't know the answer to that. And non-permanent residents, that's a good question. Let me actually check. I am curious if all right, I'll find out, and I'll make a TikTok video about it, just explaining whether or not you can be a permanent resident alien, and hopefully if you're following me, you'll see it. We're coming up on the hour, so I definitely want to finish with just kind of going through the different professions. The way that they're going to verify and qualify you based on these professions is they are going to require two things. They're going to require an active license or certification, a copy of it to be provided, and they're also going to ask for a form that you're going to attest to, saying this is, you know, this license is active, this is what I'm currently doing as as a job and a source of income. So those are two additional things you normally wouldn't provide on a normal mortgage application, but for this program, because it is specific and offered to very specific professions, roles, those are two additional items to keep in mind that they'll be requiring from you. Let's see. All right, so the list is pretty long. It starts off with sworn law enforcement officer, and what that actually means is or what that's covered is certified correction officer. Unfortunately, it doesn't include people that may have a secretarial, clerical, or professionally trained position with law enforcement. You do need to be a certified correctional officer or a licensed position. Correctional probation officer also falls under that. Firefighters count. Paramedics, certified paramedics, certified EMTs, emergency medical technicians, a 911 public safety telecommunicator. Is that? Yeah, telecommunicator. So 911 telecommunicator qualifies. As far as people that are certified educators, the list includes classroom teachers, certified school counselors, social workers, career specialists, school psychologists, and even the librarian. I didn't realize you need to be certified to be a librarian at a school, but it did make the list. So licensed child care operators also qualify, or someone that's employed by a licensed child care facility. So looks like you don't have to have a license. Maybe you do have to have a license to be employed. I don't actually know the details of that, but I'm reading off of the list. Healthcare people, registered nurses qualify, LPNs, licensed practical nurses, CNAs qualify, certified nursing assistants, home health aides. There's an asterisk that says, with home health aides, not statutorily required for certification, but works for a license-only agency. So that's something to keep in mind. Healthcare practitioner, which includes physicians, physician assistant, anesthesiologist assistants, certified medical assistants, acupuncturists, osteopathic physician, chiropractic physician, podiatric physician. I think those are foot doctors. If anyone wants to correct me, that's fine. A pharmacist, dentist, dental hygienist, certified nurse midwife would qualify for this program. Speech language pathologist or audiologist, nursing home administrator, occupational therapist or assistant qualifies. Certified respiratory therapist, licensed dietitian and nutritionist, a licensed nutrition counselor, athletic trainer, orthotist would qualify, electrologist, a massage therapist qualifies, clinical laboratory personnel, licensed medical physicist who works with x-rays, optometrist, optician. I didn't realize those were different. Hearing aid specialist, physical therapist assistant, psychologist, clinical social worker, marriage and family therapist, and a mental health counselor. So that's the all-inclusive list. If you had any questions about whether your particular role maybe is in that field, but not specifically on that list, you're welcome to reach out to me. Let me know. I'll reach out to the program directors and find out if it is a qualified role that kind of fits under. It's just best to contact you when it comes to making sure if the profession qualifies. Absolutely. I'll create, more TikTok videos kind of going over the different professions. I'll probably have a series of those videos coming out soon, but the best thing to do is just reach out to me, schedule a free call. We'll talk. The call is 15 minutes. In some cases, if I don't have a call or an appointment immediately after, it's not like I have a stopwatch here. But if I do have a prior appointment or another call that's back to back, we can always schedule a later time or schedule something else where we can talk for a little bit more in detail about everything. So you can get more information on floridahousing.org, but what I would recommend is still call me, because they don't really update that site regularly. And a lot of people will go on there, and I want to say that list of approved lenders and approved specific lenders, people like myself, hasn't been updated in like 10 years. So I've been working on trying to get my name on the list. I mean, the list probably only has no more than 20 people, and I assure you, in the state of Florida, there are more than 20 people across the state that are approved to offer down payment assistance. I am one of them, fully trained through their program. So if I don't know the answer, I have the phone numbers for the program directors, the people that are in charge of this program. So I can always pick up the phone and get an accurate answer for you. So yeah, you can go on Florida, but just be mindful that the information may not be up to date, and that the best thing to do would be to contact someone like myself or me directly and ask your questions. There's never any silly question, and there's never going to be any judgment, just in case you feel like this question may be silly, or this question is common sense, I should know this. Just know I've been doing this and helping families for 20 years now with mortgage needs, and I'm just always happy to help. Never any judgment. My ultimate goal is to make sure that home buyers, families, they go through this big, long, very important process. For most, it's going to be the most expensive debt that you incur. It's a big life decision. I don't know, for me, I would want all my questions answered, and I would want to feel 100% comfortable with the decisions that I make in regards to home financing, buying a home. So because I feel that way for myself, I want to provide that to anybody else who, requires that, or just has that questioning mind and needs to know everything. Is the program the Zumba trainer? Who's that? Is the program applies to Florida only, or other states? Right now, this program is only for the state of Florida, all across the state, all counties. Just launched today, so it's the newest program that's available through Florida Housing. I know that other states have down payment assistance programs, and some states even have a similar type of program that's called Hometown Heroes. So depending on the state, there are opportunities. Again, I'm licensed in Florida, Georgia, Texas, and California. I know that there are programs in those states, various programs. The company itself, NFM Lending, is licensed in 47 out of the 50 states. So if it's outside of one of those states, but one that the company can service, I have members on my team that I can connect you with to help you with those questions in those states. So yeah, well, I want to be respectful of everyone's time. I appreciate those that stayed on the whole way. I hope this was helpful. If you have any other questions, make sure to follow my TikTok. I put out daily content every day, just kind of going over mortgage tips, mortgage advice, just mortgage help in general. But if you want to speak one-on-one with me, just go ahead and check the link in my bio, schedule a free 15-minute call, and we'll discuss anything you want. Other than that, thank you so much again. I hope I hope everyone has a great rest of your day.